what we're pleased to be noting is that the markets functioned as one would expect. There was very good liquidity in the markets. Our exchange operators operated throughout the process, throughout the last day, very well. We saw no trading halts in any of the products that trade on our listed futures exchanges, and a limited number of halts in equities exchanges. So all in all, the American markets have handled this this correction, this movement in the markets very, very well. You know, as market overseers, our core responsibility is to make sure our markets meet the demands of investors and risk hedgers, and that the markets function smoothly. And that's what we saw in the last 24 hours.
Chris, one of the questions, though, that has been hanging out there for a very long time now is with the emergence of ETFs, with the emergence of the passive investor, if you will, that these ups and downs are going to become even more pronounced, and potentially in a crisis scenario that things could become very pronounced. Is that something you worry about?
Well, so we watch volatility very, very carefully. As you know, the volatility futures contract is one of the key indicators, and the volatility index, the VIX index, has actually been relatively low leading up to recent events. It actually was trading in the 12 range leading up into the last 24 hours. In fact, it was the futures contract was trading above the volatility index, indicating that the market was pricing in risk more than the index was showing. And now that's reversed in the last 24 hours with a big jump in the volatility index. And in fact, the futures are trading slightly below it, indicating that the markets may be perceiving that the volatility event is taking place. But we watch that very, very carefully.
You have fought back at this idea, if you will, that your exchange in particular, but the market more broadly, has not been enforced. I mean, there is a prevailing view that enforcement has not been a watchword over these past several years. You think that's wrong?
Well, it's just not supported by the facts. In fact, we just reported our first fiscal year's results at the CFTC, and by almost every measure, enforcement activity is up. We've seen record number of penalties. We've seen more active cases filed, more large cases, more manipulation cases, a greater partnering with other law enforcement partners, and really importantly, more accountability across the spectrum of market participants, from the lowest level trader all the way up to the C-suite. So the notion that enforcement activity in the current administration is down is just not proven by our facts at the CFTC.
Hey, Chris, we had a run